Hey everybody, Jordan Dunsmore here with another edition of Off the Charts. So this week we want to talk about the market. We have a lot of clients saying, hey, the market did this. Last year the market's performing well, but really we want to uncover what does it mean when people say the market. So let's go to the charts to find out. All right, so in this week's chart, we want to look at the S&P 500, which is generally what people reference when they say the market. The S&P 500 is a market cap weighted index, meaning the larger the company, the larger the market cap, the higher percentage weight that company will get. Let's look at currently the 5 largest weightings in the S&P 500. Apple, Microsoft, Nvidia, Google, Amazon. Those 5 stocks represent 27% of the S&P 500. Or you could put it another way, if you're investing in an S&P 500 index, 27% of your dollars go towards these 5 stocks. It's been a great thing the last 10 years. These have been really strong performers. But the interesting thing is, let's go back to end of 1999 and see what the 5 largest stocks were in the S&P 500 then. So we go back a little over 24 years. Microsoft was the largest stock in the S&P 500, but then you had some other names. You had General Electric, you had Cisco, you had Walmart, and you had Exxon. Those 5 stocks at the end of 1999 accounted for 17% of the weight of the S&P 500. Currently, right now, 9%. So the way we look at a lot of the people saying, hey, just invest in the S&P 500, just let it sit over time, some of that is short-term thinking. It's been a really good performer the last 10 plus years, but if you look at it since the end of 1999 to the end of 2009, the S&P actually lost money. So that's one thing we would say. Just be careful putting all your money in an index, especially one that's this top heavy, because as we know, over time, if we look back 10 or 20 years from now, there's a really rare chance that these 5 stocks are still the 5 largest companies in the US. So here at YTS, we believe in active management. When we evaluate companies, we want to look at growth metrics, we want to look at fundamentals, and size of the company isn't as important to us when we're evaluating stocks. Hope you found this chart interesting, and we'll see you next week.